So, Perennial Pride listeners, thanks for joining me as always. Really appreciate you. Hopefully, you're getting a lot of good education as you're sort of paving your own path and journey of life and your finances. And as always try to bring on some interesting guests to give you different perspectives on how to maintain, control your own wealth, and just live a life in your control. So, I'm on today to be with Gil Roberts. He's you notice the background if you're watching this on YouTube. He's at a fun place in Florida joining me, and he's a entrepreneur, ex-fiat miner, right? And we'll go more into what the heck that means. But Gil, I appreciate you spending some time with me today. Welcome.
Tom, absolute pleasure. Thanks so much for having me on, and hopefully I can provide some value to your listeners.
No, I know you will, and this is what I love about things. You may not love social media out there, and it could be a distraction for a lot of people. But I was fortunate enough to meet Gil through just a LinkedIn connection, and we got to know each other a little bit. And I just found like his experience so fascinating. I wanted to bring him on to share his experiences in a whole wide array of things. And so, Gil, why don't you tell our audience here just a little bit of background on you? I know you came from a more traditional world of finance and
Right.
such, but it's migrated over time. So tell us a little bit about that and kind of how it's evolved over time.
Yeah, absolutely. So, my background, again, Gil Roberts. I started out the usual college degree, right? Get sold that you should go get that. I started college about a year. I started with computer programming initially. Out of high school, I took some programming classes. I'll date myself. Turbo Pascal was my first language, so then moved into C++. Found out that I had zero ability to sit in a chair and pound on a keyboard. I just
Right.
couldn't. Just my personality and hyperactiveness. I just couldn't do it. I got to get out in the world, explore the map, and see things. So I switched over to finance, which is my second love, became my first love. It really, truly was where I found my talents. But I did drop out of college after the first year. Started my first business. It was import-export candy store, if you believe it. I was 18 years old. Ran 10 months and I lost a lot of money. So for an 18-year-old, 19 by the time it ended, 15 grand down the drain was a lot of money.
Wow.
And I am not from a money family. I have a master's degree now, but I'm the first person in my family to have one on my side of the family branch. So it was a big loss. However, I'm kind of a bullheaded guy, so it's like, all right, that's my fault. That was key number one for your listeners there. My fault that happened. So we're going to try again. Now, opportunities over the time. I did some website, image content delivery, just some basic stuff. This is in the early 2000s. At that time, I was building a banking career. So I was working full time, doing that, got the 9 to 5 and then the 5 to 9, right? And just kind of hustling on the side. Nothing really sparked for quite some time. So, attempt. I think I made 8 or 9 attempts in like 5 or 6 years. Some lost some money, just a little bit. I got smart, only lost a little, and I'd chuck them out, right? A couple things I sold off, nothing of note. But yeah, that's kind of where I came from. That's on the entrepreneurial side, but on the finance side and fiat banking, started out in recoveries. So when I got my banking job, again, I got that right out of high school as well. I was a collections guy. I was famous for beating up single moms for their Sears credit card payment. I know it was a terrible job, but I figured out really early on how to game that system. And this is point number 2 for the listeners. You got to read the rules. I always tell people, get that Monopoly board out, read them rules. It'll tell you how to win the game. You'll crush your friends, get tables flipped over, right? Read the rules, and I figured out that collection rates. I won't spend a long time on this. It's not very fun. You only get maybe 20, 30%, so 20, 30 cents on the dollar. So after kind of thinking about that, especially when you're trying to dun people for money, so why don't we just settle people for 65 cents on the dollar? I got 5 promotions in 18 months.
Wow.
I was doubling collection rates. I bonused the very first month I was there. And that's really what shot my banking career up. Did that for about 7 years. I moved quickly into commercial collections at a merchant bank called Harlem Payment Systems. I haven't kept up with them, but I believe they went public while I was there, and then they got bought. But merchant banking was very interesting. I still lean on that experience. Again, point number three, try to look at all the different angles of any kind of job that you have. Don't just be focused on what I'm supposed to be doing. Learn the business. Learn what's going on. Try to pretend that you're the owner, right? Even if you hate the job, just try it. So learn at all times. So uh, I got tired of beating people up for money after about 7 years, and I switched over and started handing money out. Okay, so this is where I say I'm a fiat miner. So, creating debt is a way to create fiat. That's what the Federal Reserve does, and more so the commercial banking sector. It prints money, right? I'm going to touch on that heavily later on. But with that, I started in mortgages, just doing your bread and butter residential mortgages. I was really good at tax returns because of my finance degree. I got a finance and economics degree, Keynesian economics, unfortunately. Um, Switched again, kind of figured out the game. 120 dials a day, just smile and dial, pounding telephones. After about a year, I got promoted up to commercial collections and helped start building buildings like these. Let me where's my finger at? Right here. Those big things. Not so big. Those are pretty cool, but apartment complexes next to universities. So as commercial lending manager, did that for a short period of time and just figured out I just don't like pounded phones. It had been a decade of me either calling people in collections or originating. Point number four, make sure you're doing what you love. You're going to suck at it if you don't. And it's honestly what it is. And my performance started declining because I was just kind of done with it. Moved over into equity, so series licensed. Now I moved up on a pyramid scheme, as I call it. I was a wholesaler, so I worked with RIAs that worked with their clients. I sold them products through a company called Jefferson National, which was bought by Nationwide. Interesting note, Mitch Kaplan, the CEO of E-Trade, he did the baby commercials way back in the
Oh,
day.
yeah.
He got he was let go because during the 2008 mortgage crisis, he lost like billions of dollars for E-Trade on those,
Okay.
like many other people during the time. This was his first startup after that, so I got to interact with him quite heavily. Very interesting guy. Learned a lot, but ultimately it was a phone job. Once again, I found myself in the same rut after about a year. They also didn't like the fact that I wanted to go to grad school. In a sales job, and especially phone sales jobs, if you're not selling, they're not making money, right? So, me studying the GMAT and GRE on lunch, they actually pulled me aside and was like, hey, what are you doing? Like, we're going to go to grad school, get my MBA. And they're like, And so, and Tom, you and I talked about this prior. I actually switched over to the nonprofit world. My time in doing collections for Heartland Payment Systems, I did a lot of workouts, right? So they're merchant processors. So if you stop paying them, they stop delivering money to you. It's pretty serious. It's like getting your water cut off, right?
Mm.
So with that, I was trying to help some of these business owners solve their bills. And I just got really good at consulting small businesses out of their problems. And I had, as I disclosed before, I had small businesses that went bad. So I got it. Like, I just get it. I think point number 5, connect with people. They're real. They breathe and eat. They put the pants on the same way. That's a wonderful way. It doesn't matter if they're a CEO or somebody that doesn't have any money whatsoever. They're a human being. Respect that. They can be very helpful now and sometimes much later, which has been key for my success. You never know. Somebody that's having a rough patch in their life might be very successful later on. So I went into small business consulting. I got, like I said, into nonprofit. It was under the Office of Refugee Resettlement. So for about 3.5 years, I helped low-income Americans, refugees, immigrants, prison reentry folks, just a large variety of human beings try to realize the dream of entrepreneurship. I had kind of stopped my dream of that. And when I was doing all these sales, right, you get hooked on a paycheck. We were talking a little bit before
Yeah.
we started. I was really hooked on that paycheck, and as a commission guy, I was always on commission, right? All the way back in the collections days. That's why I even started that. I got a percentage of what I collected. So I like a meritocracy. I work hard, so I want to be compensated more than the person that doesn't. you know.
And you probably, and a lot of it too, in some people are kind of always say, go for your passions. And some people don't even know what that is until you kind of experience some things, right? The things that, you got to feel for what you didn't like. And you kind of took the positives out of that experience, right? Whatever you can learn and who you connect with, all those sort of great points,
That's right.
and try to stay positive with it, regardless of what if it's not the right situation. Okay, there's still something you can glean from it that will help progress you on your further in your
Right.
life down the road, right? Right, and that's what I get from a lot of what you shared.
Absolutely correct. And, I made a lot of money. I'll disclose that, especially as a young man. I'm in my 20s doing most of this, and into the early 30s. And I blew all of it, man. Like when you're not connected to the mission of the job, and you get a lot of money, you kind of hate it, right? Because you don't like the job that you're doing. You start accumulating liabilities, and you get this pressure on yourself to go to this job that you're not fulfilling a passion in. So what do? You let off steam. You go out to the bars. You go to the club. You buy stuff you don't need. You know, or the opposite. You go sit at home. You just waste your way at Netflix and Haagen-Dazs. Like, not to beat them up, it's good ice cream, but you know what I'm saying? Like you take it out on yourself and your
Mm,
wallet, right?
interesting.
And that's the release valve. And people do that. It's even worse when you make more money, because the debauchery that you get yourself into is much higher. You can get a lot bigger liabilities because of that paycheck that's coming in. And honestly, it's not a flaw, it's a design of the system,
Mm,
right? It's not a bug, it's a design. The system, the fiat system, the US dollar is designed to do this. You're paid in debt. You're supposed to get yourself into debt, right? I'm a big Robert Kiyosaki guy from the old school. You know, he's got that old video. I posted this on my LinkedIn, an old VHS video from like the late 80s. And he draws that income chart and assets liability chart. And he shows the three patterns of low, middle, and high income class folks. And it's very, very true. Some of the stuff in his books, I'm not a big fan of. He was kind of that multi-level marketing stuff there for a little
yeah.
while. But some of that stuff is absolute gold nuggets. And it's true. People that are low income, they get that paycheck and they just spend all of it. And then people that are middle income, they get a paycheck and it's decent, but then they start accumulating liabilities, which creates expenses. And they basically, the pattern just kind of rinses and repeats. Now, they're a little bit more above water than people that are on the lower income spectrum. But I got to be honest, there's literally no difference. Like,
No,
you know,
absolutely.
you
You
just
might
have
have
a
an extra
nicer
zero.
car.
Yeah, you might have an extra zero, whatever, your paycheck, whatever, to
Right.
your point. Maybe some other, what's it, the toys or whatever, but, they're on the same sort of hamster wheel,
Same
unfortunately.
levels of depression, same same bills, same job you hate, same kind of rut, right? You're just stuck in that rut, and he calls it the rat race. I think that's the best way to describe. I don't think there's a better way to say it.
No.
So wonderful stuff, and I found myself in that wheel, to be honest, and
Mm,
even moving into mission based work, but it opened my eyes, and I was given an opportunity. I finished off grad school, so the nonprofit, it was Jewish Family and Career Services in Louisville, Kentucky. I got to give them a hat tip. They let me progress my career as fast as I could while getting an entrepreneurship MBA, which was kind of like the Marine Corps of MBAs. So they were very gracious on letting me kind of set my schedule. And that's honestly that first taste of being responsible as a young man on a schedule, and actually like putting myself and holding it, not I'll go to bed at 10 and then being out to the bars until 2. In Louisville, Kentucky, we stay open till 4 a.m.
oh,
But
geez.
yeah, you get that light flip on at 3:55 a.m. and you're like, oh, I've done something bad here. And so yeah, and I started kind of being responsible, and it was the schooling and the structure of that allowed me to kind of understand what it meant to control my life rather than my employer or some other third party being the kind of locus of control. I think I said that right. Locus of control of what time I get up in the morning, where I have to be, and because this is something, Tom. I always ask some of my interns. I had a lot of interns, and I'll get to how that comes around in a moment. Um, I asked them, when's the last time you remember not being in school? Because a lot of them are straight through preschool all the
Mhm.
way through college, right? No break, straight through. And they look at me and they say, I don't remember. And I'm like, someone has been driving you on a date and time daily. Now, obviously, your parents, but that's natural. But this third party, right? That's not your family and not yourself has been driving you and holding you to this motion, this schedule. And I got to be honest, man. Like it took a while for me to unlearn that.
Mhm.
And that's again one of the designs of the system. It's not a bug; it's a design that you're trained to be on this schedule and to report to this third party, and there's this carrot and stick mechanism, right? In school it's your grades and detention and all the other things, right? And you get the carrot and then you get to go and do things, and they don't other kids don't make fun of you or whatever. As soon as you move out an adult, then it's the paycheck, right? It's not your grades, it's not your GPA anymore, it's the bank account, right? And then there's a carrot and stick with that, right? We'll take all those nice things that you've been accumulating away from you if you don't pay your bills, right? And your employer can tell you what to do, and if you don't like do it, you're going to run out of money, and then somebody's going to come and take all my stuff, right? And you know, unlearning that was an extraordinarily painful experience, and it started with mission based work and going, I'm not here for a paycheck anymore.
Mhm.
How and controlling my schedule and getting off of that incentivization system. Look, I had nice cars. It's gone. I don't drive a nice car around. I'd rather be spending my time in beautiful Fort Lauderdale here, making great connections, than getting a big old car payment. It just doesn't matter, right? It's completely. I had this beautiful BMW and Honda pulled out in front of me, and I just crushed it. It's gorgeous. They had a name. I named the car Monica. It's a beautiful car. Oh man, I was all upset, and I'm sitting there. I'm like, I'm tore up over a piece of metal,
Yep.
right? And these are the things that I had to go through to unlearn a lot of the education that I had received that really just benefits employers, right? Now I'm not a big anti-government corporate guy, right? I'm not on that side of the spectrum, but that stuff's very present, and we see that especially with the big corporates and some other things. Um, you go to the universities, who's got the names on the buildings? It's the
Yep.
corporates, right? And the
Yep.
system is designed for this. It's all a part of the design, and your listeners and watchers here need to kind of like open their eyes and see what's going on. And sometimes deleveraging yourself, which is a painful and wealth draining experience, is the path to wealth, right? You're going to have to give things up. You're going to have to do it, and it's going to be terrible. And if you're a kind of person that cares what other people think about you, people that you don't even know, right? That don't even care about you, but you think they do. This is going to be just an absolute nightmare.
It
But
is a
it really is. It really is. But guess what? You have to do it. I'm sorry to tell you, you have to do it.
No, it's
And
it's incredible. It's incredible to think, right? Because we get to your point when you're in the system, whether you try to equate it to like, some people use the matrix, whatever you want to use, right? You're in a
right,
system that, you don't even know you're in the system because it sort of basically controls your sort of actions and behaviors and thoughts and all those things. But when you finally kind of look from the outside, like imagine you're floating above everything and just kind of seeing what's happening, like you've experienced, and you see this is a system that is meant to control you, right?
right,
And
right.
have you stay in the system to perpetuate it, and have you put importance on things that are fleeting or meaningless in the end.
It truly is. You can't take it with you, right? The old saying: all this stuff, all the money, the boats, the cars. You don't get to take it with you,
What's
right?
what's that, what's that saying? Like, to be really wealthy and abundant is just to realize that you could live without it, all the money, all the cars, all the things, right? If it pooped away in a heartbeat, you could still be happy and joyful and be good to people, right? Without it, right?
You
That's
can take that economic energy, your wealth, and actually put it to good use besides drinking all the time, going to clubs, buying stuff you don't need. And honestly, there's a lot huge divorce rates, right?
mm,
Your children, you can spend time with your family. You can spend time with your parents if they're still alive, right? These are the things that in the end will matter the most to you as you're taking those last breaths, not the car.
yeah.
Sure, it's fun. See, that's the capture is that it's fun. Um, but it's just consumerism on steroids is ultimately what it is, and it costs. Shoot, okay, let's just say it's fun and you want it. Fine, you're going to have to get really wealthy, right? Because it needs to be a small percentage of your income to be able to spend on that. And if Ferraris are a small percentage of your income, guess what the income is?
Yeah.
Keeps popping out. But so you're going to have to really go through max pain to get that wealth meter up, so that a Ferrari payment isn't on the radar, right? So I when I do talk to people about this stuff, it's like it's not that you can't have it. It's just most people that do can't afford it, right?
Right.
That's if you can't pay cash for the car, you cannot afford the car. You can't afford it, right? Because you're going to pay 2 to 3 times the value of that car and the interest. The fiat miners will get a hold of you. I was one of them, right? A lot of people don't realize this, but in many countries around the world, the 30-year fixed mortgage is illegal.
Right. Right.
It's usury. It's actually one of the fewer countries that's even allowed, right? Now, I get not everybody can save up for a big house, and depending on where you're at, if you're in California, that's a lot of money. So you have to do something to make that happen. But you need to look at 15 years or less, and if you can't afford that, it's okay to rent. Nobody's keeping score, right? And if your
Right.
friends are
Right.
keeping score like that, they are not your friends.
That's
Point
right.
seven. Those people are not your friends. you know, I rented forever, right? And I like to rent and invest the difference. So let me. We're going to get towards the end of time. I want to spend some. So there's 4 key assets in life that I earn my freedom. I'm still on my journey to wealth. I'm no billionaire or anything of that nature, but I bought my freedom, which I found to be much more valuable than a big stack of fiat money, right? So I get to do what I want to do when I want to do it. If you go to my LinkedIn, I got like a zillion different little jobs that I leverage to be able to A, afford my experiences, and B, be able to accumulate wealth in the terms of passive income. And that's key number 1 here. You have to look at your ability to offset your passive expenses like feeding yourself and
Hmm.
clothing and general energy costs and all the stuff that keeps getting inflated. You have to have something that's going to at least run fast enough to stay in place. And I'm a real estate guy. That's what I did, as I've disclosed in banking. But I don't like physically owning real estate. Maybe some of your other guests might disagree with me. Some people are really into that, the fix and flips and stuff of that nature. I like owning financial instruments, REITs, real estate investment trusts. And I'm a derivatives trader. I was series licensed, so I got into options trading early on. Been doing that a lot. Not for everybody. Not for everybody. Educate yourself before you touch any buttons. Uh, but the ability to hold an income producing asset and then write. So I'm an options writer. I don't buy or sell. I write to increase the amount of income and then don't spend it. This is the key thing. Don't spend it. Continue to build the assets. So I rented forever because I saw the inside of what was going on in these mortgages and said, "You're dumb. You're dumb, right? You're gonna pay 400 or 500% for the house. Do this, rent, and then start shoveling money into REITs." We got to the point where the REITs via IRAs, key, was the same amount, the monthly payment, as the rent payment. And it clicked. I was like, I'm living here for free
Mm-hmm.
because I got REITs paying me. And then when I pay the mortgage, the rent, excuse me, it's the same amount. Now I had them come into the IRA, so I wasn't shoveling the money from the IRA out to pay rent. But the incomes that I had at the time, the types of income paychecks that I had at the time, that equals. So it's basically, I was like, I'm paying rent, but really it's a deposit to the IRA, right? And then that got to the point where the IRA is kind of funding itself. And that's where I'm at today. So I don't have to worry about those retirement payments because I have the REITs that pay that. Um, as a banker, I was also an ex-gold bug. So the four key ones, you have your fiat currency. You're not going to be able to get rid of the US dollar just quite yet, or euro, or wherever you're at if you're watching this. Gold, which gold's at an all-time high during this recording. I'm an ex-gold bug. I was a banker, so of course I like gold. I saw how money was created. I'm like, ooh,
Yeah.
I need a harder asset. It's not harder to just create. I'm gonna take this out. It keeps falling, but I need a harder asset, which led me to real estate, right? And that is also from the banking side. So gold, real estate, and then your cash balances. But really, and this is where I want to culminate for the viewers and listeners, and what's really actually set me free is Bitcoin. Now, I'm not here to shill Bitcoin. I can, you go to my LinkedIn page. I talk plenty of trash about Bitcoin and make fun of gold bugs and other fiat miners since I was from that world. I don't really pick on real estate. I do like real estate. It's my second favorite, gold third. Um, I'm not a big bonds guy. I don't like putting other people into slavery, into debt slavery. So I have a religious problem with that. So I tend to stay away from those. Corporate, sure, but like anything where it's actually going, where it's consumers and all that. I already did that terrible path a long time ago. I just closed the collections, and I'll never go back. And I don't want even to start people into it. But Bitcoin, it's the hardest asset known to man. And anybody, I'm not going to give a money history lesson here, but ultimately the hardest money has always won. You can look at, just Google wampum and the purchase of Manhattan Island, right? Like what the Europeans did to the Native Americans to purchase Manhattan, one of the best business deals in the world, that utterly destroyed that part of their civilization through basically economic warfare by hyperinflation, one of the first recorded hyperinflation events. So very interesting. The listeners can Google that; it'll blow your mind. But ultimately, you have to get things that are appreciating and can be operationalized, meaning that you can draft an income. And I have a few equity stocks that I deal with, but I'm writing options on it. That means I'm getting income. I'm getting a premium off those options every 4 to 6 weeks. If I'm going to park my money, my economic wealth somewhere, it has to pay me, and preferably monthly, right? A lot of people go, oh, utilities, some old people stuff, as I call it. You don't have to do that, right? There's plenty of ETFs and other things that have options chains that you can work with to create a monthly income off of it. Point number, I guess I'm on number 8 now. Be compensated. You're never going to start a passive income if you don't start a passive income. You can't. Don't go buy Tesla shares. No, not financial advice. Don't go buy Tesla shares and expect that to retire you. It goes up and down. It's a company. I like Tesla. I know some people don't right now. It's not fashionable, but it's, I like where they're going, right? It's a company. But I don't own any of their shares. I follow along. I like to watch their options chains. I do use TSLL, which is a leverage play, and then write options on top of that. So it's 2x and then I got options premium. You got to get action. You can't just buy a stock and sit in it. You're going to wait forever, and things go up and down. I mean, just less than a year ago, Intel makes computing chips, 30% in one day or something, like 20%, something
Yeah.
crazy, just wiped out billions of dollars in value. Now, you need to be compensated with some form of money, right? So that to take the risk of leaving your money there, even as an equity holder. So make sure you're getting compensated to start that passive income. Now, back to Bitcoin. Bitcoin's like, well, Bitcoin's hard to operationalize. That's not true. So one of the things that I think that was key for me, again, not financially licensed, no longer licensed, but just this is what I do. There's a ticker called BITO, BITO, and I don't get compensated paid. I'm sure Tom doesn't either. But
Nope.
these are just some examples, right? I like giving real world examples. BITO is a futures ETF on Bitcoin. It's been around for years. Like the spot ETFs came out a little over a year ago, but that's spot price, right? They don't pay you a dividend. BITO, go look up the dividend. I won't mention it, but it's insane. It is insanely high dividend because of the price action. Bitcoin's the hardest asset known to man, so as my boy Michael says, not. But as Michael Saylor says, it's going up forever, right? Number go up technology, Safe Dean Ayamas, quote him. But so if you're in a futures, they're trading 90-day basically futures contracts, 30, 60, 90. It's a ladder, right? So when the 30 is done, they use the money to go buy a 90, and then things march up and down, right, as it goes. So I get a monthly dividend paid in U.S. dollars from that. It also has an options chain, so I'm selling options on top of that ETF. And then, of course, I'm getting the price. You still get the underlying price movement. And when I say sell options, it's cover calls. Nothing crazy, no nakeds, no spreads. Don't do any of that stuff. The casino's that way, right? Casino is that way. The Hard Rock here in Fort Lauderdale is that way. Now, this is an amazing statistic for people, and this hopefully will scare some of them. People will think about clicking buttons they should be clicking on. It's called 90-90-90. Pick this up from a guy named Anton Creel. Shout out to him, by the way. Take a look at what he's got going on. But 90% of traders lose 90% of their account in the first 90 days. Right? That's what options. It's called 90-90-90. Yeah, absolutely. So don't go do this willy-nilly, but go take a look. Educate yourself on what's happening here. But here's the interesting thing. Only one out of about 100 new options traders actually get good and start making money. 12 out of 100 people leave the casino with more money than they started with. So you're 12 times more likely to make money playing blackjack or something than it is to be just monkeying around in options. So, proceed with caution when you're looking at what I'm talking about. I have a finance degree. But I think, a lot of people could actually understand this if they take the many hours, not just one book, right? A few hundred hours to do the education. It's a good 5 to 9. If you got that paycheck and you can't get away from it, it's a great 5 to 9 job. Study, study, study. Don't stop learning. But with that, I'm able to draft passive income off the futures dividend, along with a little bit of extra on the call option premium, selling covered calls. You can do the same thing with REITs. It doesn't have to be Bitcoin. You don't have to get orange pilled and run into that, even though I would suggest it. You can do the same thing with REITs. These are monthly dividend paying assets. And there's a whole variety of REITs, a whole rainbow. It's like going into a Baskin Robbins. There's tons of different flavors. You can do single family home. If you're a person that just likes the fix and flip mentality, they have single family home REITs. You don't actually have to do it, right? You can still keep your job and just do this on the side, a few little button clicks, obviously read up. But, there's you can get resort ones. I mean, there's commercial ones. I'm a big commercial space fan right now. But, there's all kinds of different whole universe of REITs for people to get into. A lot of people understand real estate a little bit better than Bitcoin. So.
Yeah, and I agree. I mean, and that's why it's important, assets, and going back to kind of the Kiyosaki side of things, why buying a house is not an asset because it drains income, not produces it, right?
Yeah, you're the renter.
Right.
You're your own renter, right? So it's coming out of your paycheck, and you got to fix everything. Yeah.
Right.
Water meter breaks, it's $1,000 down the drain, right?
So for you too, I know you're big into Bitcoin and the education around that. For someone who's like well versed in this space, and there's a lot of still people I run across that maybe really don't even understand it, and so they just what do? They just kind of run away, right?
Shut it down.
So,
they just shut it down.
Shut it down, right? It's too scary. It's too weird. Whatever. How do you explain that to how would you explain it to a 12-year-old? What this is and why it's important.
Well, I always start with this initial description of Bitcoin. It's everything about computers and money that people don't understand, right? So it's going to be, look, this is not an easy journey for a lot of people to start on, right? You're going to have to, I tell people, look, I was a banker. I had a finance degree. I didn't get into it until just recently, like maybe 2022, right after the FTX collapse, is when I started making some purchases. Um, I started very small, and I had a 15-year banking career, thought it was magic internet money, right? There's a lot of disinformation out there about it. But
Mm-hmm.
once you get that it is a open and permissionless commodity, just like money, all currencies are also commodities, just like gold, and you understand that there's a gigantic computer network that's larger than uh, all the governments and militaries, corporations and universities' computers put together. When people say it's not backed by anything, it's backed by the largest computing network ever created, I would say, in the universe, because we haven't met any aliens. So that's what's sitting behind it. And those computers enforce the rules fairly, and it doesn't matter if you're rich or homeless, the rules are the same. It doesn't matter who you know, what college your parents went to, how big daddy's paycheck was, right? Doesn't matter, humble beginnings, billionaires, it levels the playing field when it comes to money, right? And no one can print any more of it. There's 21 million coins. I'll give it another misconception. So misconception number one, it's not backed by anything. It's backed by the largest computing network known to in the known universe, right? And it's measured in what they call hashes. I'm not going to get into the technical stuff that we could spend a whole podcast on. I'm here in Fort Lauderdale for the Bitcoin Mining Disrupt, which is the mining conference. That's the real nerdy stuff on how this happens. But think of it this way. They're the central bank replacement. It's one
Mm-hmm.
ledger. Everybody has it. Everybody knows where the value's at. 21 million coins are enforced. Now, misconception number two, I have to buy a whole coin. It's 83,000. It's down a little bit today. It goes up and down. But 83,000 a coin. The first transaction, you could have bought one for 2 cents. You want to talk about wealth creation? It's up over 635,000%. If you had put $1 in it 12 years ago, that's 635 grand. That's a real number. It's crazy, right? And that's how hard the money is. But you don't have to go buy a whole coin. Every single Bitcoin is broken literally in 100 million pieces, so it's 8 decimals out. The US dollar is broken into 2 decimals, right? Pennies, we call them pennies. In Bitcoin, we call those Satoshis or short sats. You can go buy a dime's worth of sats, like literally 10 cents. So start, taste it. You don't have to go put 1, 3, 10% of your income or net wealth into it. Go buy $10. That's literally what I did. I went to a service, I bought $10 worth and watched it for a little while, and it got me interested in what was going on. And I'll tell this story here. But the first time I sat down to actually study it, after I bought the $10, I was like, okay, I'm going to sit down and read some stuff. There's plenty of stuff out there now, and this is in 22, so there's definitely a ton more stuff for people to learn about. My wife went to bed. It was like 10 o'clock at night. I'm an early morning guy, but it's like, I'll sit down for like 60 minutes, and I'll know this thing by then. She woke up the next morning, and I was still awake. I had a bunch of Celsius on my desk. I was drinking. I was absolutely hooked. I did almost 10 hours straight. I asked her to take the kid to school. You know what I'm saying? I was like, I'm not getting up from this chair. And it just blew my mind that we were able to progress currency as a human technology and accounting, which hasn't been progressed in almost 400 years, double entry accounting. You now have triple entry accounting. As soon as you make an accounting entry, it's audited. That's the blockchain. And the hardest form of money, meaning it's a fixed supply. There is no actual inflation. Now, new coins are being found, air quotes. Again, I'm not going to get into the mining side. There's an issuance schedule. There's only 21 million, and they're buried in time, so you have to wait to find them, and that's what the miners are doing. But there's only ever 21 million. If you, as a wealth person, you just go, okay, the supply is 21 million, then you don't have to worry about the inflation rate. It's going to cap out at 0% anyway once they're all found, and that's the end of the what they call block rewards, which is kind of like a subsidy. So with that, A lot of people understand like Mickey Mantle baseball cards or the Mona Lisa or some of these other things that are collectible because of their limited nature. And then you go, wait a minute, isn't that everything? Like the reason that this building here behind me is expensive is not because it's made out of glass and concrete. There's buildings like this in the middle of the Midwest that nobody cares about, right? It's same one, but why is that expensive? Because of where it's at, right? Like this, like there's yachts and stuff. Some of them have come and gone. The reason that that building's worth anything is because there's a scarce amount of space. I
Hmm.
mean, why is it so tall? Because that's the only way they can squeeze more value out of the scarce space that's there, right? So scarcity is the key. Well, a fixed supply is ultimate scarcity. Now, a lot of people compare, and I, like I said, I was ex-gold bug. I sold all the gold and bought Bitcoin because it's, to me, and it's been publicly said by many, many people, particularly in the Bitcoin Strategic Reserve that just got signed in. It's digital gold 2.0. It's gold that you can send across the internet. That's the best way to say it because gold is very scarce, and that's why human beings naturally. There's no government that said gold was money. I don't know for 7,000 years, right? Now they would stamp gold coins, but gold itself became money on its own. The private sector came up with that. It's the same thing that's happened with Bitcoin. The fiat experiment, the printing of money, is less than 125 years old. 1913 is when it really got started. That's not that long ago in terms of human history, right? It's very, very brief. It's a flash in the pan, and it's caused all kinds of disasters, right? Endless wars, the increasing prices you see on your shelf. It's not that bags of Doritos suddenly got harder to make. It's what you're buying those bags with is worth less and less. And I'll get off my soapbox here in a minute. But the number one cost is one, taxes, and number two, inflation, which is just another form of tax. And they print that little number on the screen, and that's the government's own report reporting on itself. But really, if you look over time, purchasing power degradation is about 14% a year, right? So you're holding on to a melting ice cube that's fiat, your currency, and it's melting, which forces people. We're gonna do this nice little circle around here to go and be consumers. They even call us consumers in the report. I'm not a consumer. I'm a human being, right? So you got to spend the money. You'd rather go buy the bags of Doritos. You'd rather go buy and go get the mortgages and stuff like that to buy things like this, right? Get the car. The money's rotting. And people just take this for granted. It's only been like this for less than 120, 25 years. Before that, you could get a gold coin, stick it in your mattress, pull it out years later, and you could buy more stuff than what you could when you first got the coin. That's called savings. Now everybody has to be an investor, right? And that means you got to go and slave over your paycheck, and then you got to step into the casino of the stock market, and you got to gamble it. You got to go buy Tesla and ride it up and down. You got to get NVIDIA, and all this other stuff. And now you got doctors that are having to spend 2 or 3 hours in the evening trying to figure out how to keep the money that they just worked for, right? With gold, we used to be able to save. Now gold, again, I like gold, number 3 on my list, but it's analog technology. And some of this I'm borrowing from plenty of other smart people, but you can't send gold across the internet. You can't
Right.
take a gold bar, stuff it into your modem and send it across, right? It's very expensive. When you get a bar, you don't know if it is. Maybe it's got tungsten in there or something like that. You got to melt them down like this. And that made sense before the internet. That's what really Bitcoin fills. Now, I want to say something as we wrap up here. It's highly volatile. The internet was highly volatile, less than 30 years ago, right? A lot of internet companies went in and out of business. It's the same thing that's happening with Bitcoin. It's going to have volatility. But if you look back, there's not a single 5-year measurement period, Scout's honor, that you've lost money with Bitcoin. If you take it over a 5-year period. So if you're looking at an allocation to Bitcoin, not financial advice, put small amounts, do your homework, right? $10. I'm talking small amounts, right? $10, do your homework, and just buckle up for 5 years. Don't sell. That's the point. It's the same thing with gold, right? You don't buy
Yeah, you're
gold.
not looking at it every
No,
day.
you stick it in the safe, man. You get your small denomination gold coins, stick them in the safe. When you're grandpa, you hand them to the kids, and it's worth a lot of money. We've lost the ability to save. When we got fiat currency, we lost the ability to save, which is the number one way to accumulate wealth, is to defer consumption. Don't go get the car. Don't go to the clubs at night. Take your money, get you a coin, gold or Bitcoin, put it in the mattress, and be compensated for being a good person and saving money, right? You don't have to go and gamble. You don't have to go put it in the stock market and get caught up in trying to trade options and the 90-90-90s of the world. You don't have to do that. Find a hard asset. If it's gold, if it's real estate, preferably if it's Bitcoin, and save. Do the savings.
I
That
have
will help you build wealth, and then you can take that savings, create some passive income, as I've talked about, free yourself, and do beautiful things like enjoy a nice Friday here. This is the only thing I'm doing today. The conference ended yesterday. I'm going to write up a few articles, but I'm going to enjoy myself here in the beautiful weather.
That's
You
awesome.
can too. Anybody can do this. I don't care how much money you have. Start
Well, and that's it.
saving.
It
Yeah,
starts with, and for you, like starting with the recognition what's happening, and then taking small steps to start learning and getting comfortable with these things, because these things will go against the grain, and anything against the grain in life and everything is difficult for people. So it's hard to get started. And just like Gil was suggesting, get yourself educated, start understanding how the system works, so then you can start pivoting and sort of adjusting along the way. I'm not
that's
saying
right.
to completely throw everything you've been doing away and sort of start from scratch. You've got to learn these things. So, Gil, really, really sound advice, because until you start doing that, like you said, like, and I love it too. Like I put money in something, I get interested and I start
That's right.
learning about it, right? And that's all people need to do, whether it's real estate, getting to learn about gold, Bitcoin, a new business, whatever, right? Just get started, because you're going to start learning more about it, and then you'll start realizing what it is and what it can be, and so it just will build over time, and have the patience with it. So,
Absolutely. And you don't have to come from blue blood. And I actually grew up very poor myself. I slept next to kerosene heaters until I was 5. Like I grew up I don't have a rich family or background. The first person with a master's in my family. I think I mentioned that, but you don't have to do it, and you don't need zillions of dollars to do this kind of thing, right? Like you don't have to. You don't even, you just need one comma in the number. It's not hard. It's not hard. You don't need lots of commas, right? You don't have to be a billionaire to be able to be free. What you have to do is control your spending, set your expectations, stop caring about what other people that you don't know think about you, and do the right thing. Deny yourself, begin saving, and find freedom.
love it, Gil. Gil, well, I appreciate you, man. I have an enjoyable rest of your time there in the sunny
Absolutely.
state of
Tom,
Florida, and I appreciate you sharing all your great wisdom and
absolutely.
journey.
Tom, thanks for having me on. I love being able to spread this positive message to amount of people. I'm on LinkedIn, Gil Roberts, GilRoberts. You can easily find me. I got an open profile. Look it up. I talk a ton of Bitcoin trash on there. So if you're interested in that kind of stuff, come by and take a look. But I drop nuggets of gold every day. I do some coverage of some of these conferences, not just Bitcoin. I also do some fintech stuff as well. So I encourage people to stop on by. And obviously, if this is your first episode with Tom here, this guy's great. I've been listening to your podcast, so definitely follow Tom on LinkedIn and make sure you grab some of his. He's talking real stuff with people.
Thank you, brother. Thank you. Well, enjoy it. We'll definitely be catching up soon, so I appreciate your time, Gil.
No problem. Thank you. Thanks, everybody.